Welcome, everyone. My name is Brian Robson. I'm with Breakout Investors. I'll be hosting the call today and getting help along the way from my fellow Breakout investor, Florian Bushik. Today, we'll be speaking with Gavin Burnett. He is the CEO of Locafy, ticker LCFY. The call is being recorded on October 25th, 2023. However, Gavin will put an asterisk next to that, because it is October 26th in Perth, Australia, where he is located. The call will be distributed via the Breakout Investor channel on YouTube and via our podcasting network. And I believe it'll also be posted to the investor section on Locafy's website as well. Look for Breakout Investor content wherever you subscribe to podcasts. We're on Apple, Spotify, Audible, and most other platforms. Supporting materials for today's discussion will be posted on the Breakout Investors collaboration app, available on the app stores and at app.breakoutinvestors.com. The application, as well as much of the research content, is free. Those of you already on the Breakout Investors platform can share your questions for the company using the Discuss tab in Florian's breakout room. So let's get started with me handing the call over to Gavin for a recently updated, and when I mean recently updated, I mean updated as of today, investor presentation that he'll take us through, and that'll be followed by Q&A. Gavin?
Yeah, thank you very much, Brian. Much appreciated. It's always a pleasure to catch up with Brian and Florian and also the wider Breakout Investors group, and thank you for your ongoing support of the company. Really appreciate it. And yeah, you're right, Brian, time travel is real. It's already tomorrow here, so yeah, there you go. So Locafy, you guys, many of you are already on board as shareholders, and you're quite aware of what we do. In recent times, we're increasingly using more automation and generative AI to really revolutionise the SEO industry and helping more businesses get found online faster. We recently released our F20, and there were some pretty decent highlights in there. We have now demonstrated 6% average annual growth, revenue growth from FY21 through to FY23. We undertook quite a deal of consolidation during the course of the last 12 months, and I think we've got our business into a really good shape as we prepare to hopefully take off. You know, the market we're operating in, as you guys know, is enormous. People are spending, or businesses around the world are spending well in excess of $750 billion essentially to get found on page one of Google. That's what that really boils down to. We still believe, from what we've seen, we're the only SaaS platform that is doing SEO, and that's because it's really hard. SEO is not a static industry; it's constantly moving. And one of the advantages we have with the platform is that all of our clients centrally, as opposed to having to go to each of them individually. And the products are delivering some fantastic results, and I'll share some insights, some confidential insights. I won't reveal who the clients are, into some of the performances that we're delivering currently. Market overview. As I mentioned, that money that's being spent, it's being spent to get to page one. 98% of customers will search for local products and services online, and most people simply don't go to page two of Google. They would more likely put in a new search term. And the impact for businesses, if they're not on page one through either paid advertising or SEO or in the map pack, then they're basically not in the hunt for that new business, because consumers are very fickle. The big change in the past 12 months has been AI, and we conservatively estimate that, in our opinion, that the amount of content that's been published online has virtually doubled in the past 12 months. So when you think about that, that's a lot of content that the search algorithms have to trawl through to try and find the right web pages to surface up that support their advertising business. Now, let's be clear on what search is. From a Google perspective, they're an advertising engine. They're not a consumer search engine. Their whole remit is to make revenue for their shareholders, and in their instance, they do that through advertising. So that's how we look. That's the lens we look through when we're doing our SEO, is how do we best complement that advertising model and help our customers get to the top of search that does supports our advertising. We think it's smart to be complementary as opposed to be combative to a very large search engine. As we touched on, this really is the tip of the iceberg. There's a lot more money spent around the edges than the $730 billion that we're talking about here. In the piece that we operate in, it's usually a very labour-intensive, time-consuming exercise, and it's constantly changing. We see it all the time with the SEOs that we talk to. They're scratching their heads at some of the most recent updates that have come with the algorithm and algorithm updates, and they're trying to figure out how to get their clients back on top. With ourselves, that's our job. So when we're providing a technology to our clients, we see the algorithms changes. We're not immune. We'll get hit as well. However, we can respond very quickly, and that's really the difference. We're constantly researching, constantly testing, and that's the benefit that our clients get. Our solutions. We believe we've got some of the fastest, most consistently delivering cost-effective SEO solutions in the market. We're still delivering page one results for customers for local and national and brand within 30 days. And it's quite funny. Once those expectations, it's not funny, but it's quite interesting that once those expectations are set, if it takes slightly longer, customers wonder what's going on. It's not easy to do. And typically, it's going to take a customer 9, 10, 12 months to get to page one if they can ever get there at all. So those rapid results we're very proud of, and they're delivering great benefits for our customers. The majority of our clients do have a page one presence, and they do get there very quickly. Entity-based pages, I think I've touched on this before, but for those not familiar, in our view, this is how the Google advertising model works. It's based around entities. Entities are people, places, things, or products. And what we know through our testing is that if we can optimize a business for the entity that's most closely associated with it, and I'll use a simple example. I'll use ourselves, for example. Internet marketing services. If you can rank for that, then you'll pick up a lot of associated keywords without having to optimize for all of those individual keywords. So it's a very powerful way of helping a client get prominence for a vast range of keywords associated with their business without even having to put the keywords on the page, which sounds counterintuitive, but our substantive testing has proven that to be true. And the evidence in the market, which I'll get to a little later in the presentation, is unequivocal. There's no doubt in our mind at all. So our family of products, we do operate in local and national and brand. When we started out life, we were really focused on the local SEO solution. After the acquisition of Jimmy Kelly, that brought in some additional national and brand products. And I think it's fair to say that our main focus is in the local and national area because of the very sizable opportunities that we have right in front of us, some of the commercial deals that we've done, and some of the existing partnerships that we can extend. So just to be clear on where we're focused, it's in those areas. So in the local product area, we really have a couple of products there that help customers gain prominence. One is in local landing pages. One of the benefits of that is that we don't need to touch the client's website at all. We produce landing pages which are independent of the client's website. They still look like the client. They're still branded like the client, and they target very specific keywords and locations. Now we do that through using that entity approach that I talked about. So we will use the entity as the primary words that we're going after, and then the customer can still suggest additional keywords that they might want to rank for, and that's fine. That helps produce a network of pages, which is effectively like having a billboard on the street corner in all of your local sort of streets that are promoting the services that you do, but in a digital sense. The other areas that we can impact are the map pack. We have solutions that will bump customers up into the top 3 of the map pack, and also expand the region of prominence in a radius, anything up to about 10 mile from the centroid. So I'm using miles, but if I'm talking to Canadians, that's kilometres. Because I know when Miles Davis tours in Canada, he changed his name to Kilometre Davis. Brian, is that true?
Don't know.
But anyway, yeah, we can influence quite a range, and that's incredibly valuable because when you look at where the organic traffic comes from search, there's about 94% in total will come from the map pack and from organic search. A lot of people do skip over the ads to get to the content, so it's very important to be in those 2 places. This is a product here, Keystone, that we're particularly excited about. I know as investors, you're probably eagerly anticipating seeing the impact of the contracts that we've won, and I'm confident that is not very far away at all. So whilst deploying the Keystone product with one of our partners, they asked us the question, could we apply a Keystone to individual advertisers? So we'd initially set out to, with Keystone, to impact an individual website for a customer to make that rank for a national term, like say online loans or whatever the case may be. And we hadn't actually considered that as a solution, but we tested it, and sure enough, it works. So how publishers make their money, and publishers are companies, when I'm referring to publishers in this instance, they're media organisations that have news sites. I won't name any in case it gives an inference as to who I might be talking about, but they operate newspapers online essentially, and the way they make money is advertising. Customers will pay money to have an article written about them. They're called advertorials, and they'll be blended in with the general content on the site. And they pay quite a lot of money every month to have those articles in place. With our technology, what we can do is we can impact that URL for whatever the topic is that is being spoken about. So let's just use online loans as an example. We can apply our Keystone technology to that URL and then move that article up Google rankings into the top 10, top 5, top 3. Now, the value for the publisher is typically the only way that those articles would generally get read is somebody subscribing to that publication, or if it's a free one, then they would go to that publication online and read it and stumble across it. So by increasing the distribution of the article into the wider world, where people are just looking for personal loans in that instance, we are dramatically increasing the volume of people that are seeing that article, and therefore the value to the advertiser. It makes a lot of sense for the publisher to take this on. One, they make a margin on the technology, so we wholesale it to them, and they sell it to their client for retail. And there are literally millions of articles that are published each month across North America, and each publisher would generally publish many tens of thousands of these. So we're very excited about that. Why we're excited is the trials that we did, all of them worked. We were given multiple, I think it was 10 different articles to impact. We had 100% strike rate. We've now got our first paying clients, and we've hit the mark with all of the key words that they were seeking to rank for. So watch this space on that front. We've also started trials with a couple of other publishers not related to the announcement that we made in June. Brand, to a degree, to be completely transparent with the investors here, this has taken a little bit more of a backseat as we've been rapidly progressing those local and national opportunities. We still have customers here that we look after, and we love them to bits. But there's only so many things that we can do as a team, and I think you would appreciate that our role as managers is to get as much revenue, get to profitability, and get the best return for our shareholders. So that's where we're focusing our efforts. Our commercial edge across all of those remains the same. The time to impact is a big one. Oftentimes, if you're in business and if you've ever sought out SEO services, I'll almost guarantee you that those providers will say, look, it's going to take 9 to 12 months. It's going to cost you thousands of dollars, and there's no guarantees. Well, we do it regularly inside that 30 days. We don't need to have lock-in contracts, and the solutions start from just a few $100s a month compared to many thousands of dollars a month. When we wholesale our technology to our resellers, even if they're digital agencies or SEO specialists, they do not need to know anything about SEO to deploy these products and make them work. And it's highly scalable. So we can, whether it's local or national, we can rapidly scale these solutions, and we do not need to increase the size of our operations team or R&D team in accordance with the growth of clients or revenue. We touched on go-to-market strategy in the most recent presentation. So if we look at the key areas that we're focusing on, strategic partnerships, and these are with media organisations, like the one we announced in June. We have been working very closely with them for a number of months now, and that's looking really positive. We have unearthed other partnerships with publishers. We have started a trial with one of those, and there are another couple that are very close to trialing as well. This is an incredibly scalable solution. It's got a very high margin, and it takes next to no time to implement. And I'm talking 2 to 3 minutes, literally, to implement the solution, because we're leveraging off the power of the domain authority of the media company that we're working with. So it's a win-win on that front. And those solutions are worth hundreds of dollars a month per implementation. You will see a campaign, or you may not see a campaign, but we are starting one in North America next week, and that is specifically targeting new resellers. With the completion of the deployment of our upgraded platform, we're now ready to hit the market hard, and we're working with some pretty talented MarTech people in the US, and we're about to launch that. So we're anticipating that we'll see good growth in bringing on resellers to sell. We're really focusing our efforts there where they'll be selling our local technology. Publishing partnerships. Again, watch this space in the next couple of weeks. We have been talking about connecting our publishing partners to our API. That's now complete, and we are very close to completing our first integration with one of these publishing partners inside their own environment, which will enable them to acquire our local Pages products for their customers. Direct customers, we do have an extensive database of direct customers that we could target, but again, we have to pick our battles and think where we're going to get our best return for our efforts. And it's really those first 3 areas there that we're mostly focused on. I did touch on just then the go-to-market approach using the existing data. We announced a deal with TransUnion. Yeah, these companies, and there's some pretty decent names there, all connected to our API. I would say more likely early next year for the bulk of those that we would look to increase the engagement. They're already commercial partners. We already have commercial arrangements with these companies, and they collectively spend about $1 million a year already publishing content across our publishing network. So the idea is that we will be hopefully extending those contracts into us providing them with local landing pages. Just wanted to give you an idea of sort of the range of prices that we offer to the market, to give you an indication of where we sit. And these are wholesale prices; they're not retail prices. So when we're selling to resellers, our local products will typically be in the order of $200 to $1,000 a month. That would be selling it to them, and then they mark that up and sell it to their clients. Similarly with the national product range, this starts at around the US 500 and then can go, to a lot more than that. Brands are from 2 to 6,000, and the publishing agreements, I touched on that sort of $1 million worth of revenue. So publishing agreements tend to start around US $1,000 a month for the smaller publishers, and it goes upwards from there. We are gaining some really solid traction. So whilst we've also been consolidating the business, bringing in a great deal of automation into the business as well from a delivery perspective, we have been gaining traction in some key markets. That major media company signing in June, we are anticipating we'll start to see some of that impacting our P&L this quarter, based on the results that we've seen and how enthusiastic they are about the solution that we've deployed for their clients. We have engaged that MarTech company, so we've got a launch next week where we start to target resellers, and this is a trial run. The major push will come in January of next year, but that's exciting. So we're really aiming to grow the reseller base to sell our local pages, products, and other local solutions. We do have publishing partnerships underway, these are those companies that you saw the logos for, where we are deploying local pages for their clients. Those results have been very good, and a couple of them have said that they would be interested in a partnership early in the new year, just with their business priorities. And as I mentioned before, we do have a decent base of direct customers, but it's not the immediate focus. It's really growing out our reseller base and also selling as many keystones to publishers, media companies as we can. The financial highlights, which you would have seen in the recently released F20, our revenue growth was 27% from the previous year, 60% average over the last 3. Subscription revenue growth is up 27%. Cost of sales down 19%, and we continue to look at ways we can drive that down. We're really not reliant on third-party technologies at all, so hopefully we can get that down even further. Our gross margin 82%, and our active reseller count is at 107. Again, apart from being a very handsome group of individuals, this is your board. Colin Basaggio, ex-CFO of Interoil, which sold to ExxonMobil for $2.6 billion. Rankomatic, I was joking with an investor earlier today. I said, if you ever wanted to have a board member with the perfect name for a SaaS company that does automated SEO, Rankomatic would have to be the one. You can't even make that up. It's a great name. We wanted to use it as a product, but it's his actual real name, so we decided against that. He's a great guy. There's myself and Melvin Tan and Andrea Betty. All of us have extensive public company experience and listed company experience across the board. And that's it for today. Happy to take on any questions, and I'll do my best to answer them.
Okay, great. I will get us started. Firstly, as far as the NASDAQ compliance, you'd received an extension, and it was in part contingent upon the filing of your 20F, which you've now done. What's the status? Have you heard back yet from NASDAQ?
We hadn't heard back from them, so we've reached out to them politely to ask if they could kindly review the F20 and come back to us. So that has been done, Brian. We're waiting.
Okay. Very good. And, we had you on a call, going back to December of last year. And so some of this, you spoke about in that call, but could you again speak to the magnitude of the investment that you've made in your technology and platform, just so people can appreciate the magnitude of that investment?
Well, the total funds raised by the company are closing on around 50 million Australian dollars. And we continue to invest in R&D. As you can see from the F20 that we filed, we And that's the way we stay ahead of the game. So yeah, there's been a sizable investment, and it's given us a significant edge in the market, Brian. I think it's fair to say.
Very good. And maybe a little bit on the cost side before we focus on the far more interesting revenue side of things. But can you go into a little more detail in terms of, I guess I'll help I'll tee you up on this one.
Thank you.
You mentioned that you've automated a lot of things. You've kind of centralized your platform. You've had some rationalization of positions that weren't necessary, kind of given your changes that you made with your technology. Can you kind of, maybe speak to that in a bit of depth? And then if you're willing, can you give people a sense of what your cost structure is looking like going forward? Because there was a lot of kind of ins and outs in the 20F with reversals and the like. So on a steady state basis, kind of what you might be looking at going forward.
Yeah, I might need to be careful how I answer that last question, as it's not in the public domain as yet. But what I can say is that the headcount is pretty much close to halved since our peak of last year. So that will give you some indication. A lot of that, it's across the board, really. We dramatically changed with bringing Jimmy Kelly's team on board. That gave us the ability to really reshape the research and development team. And we pared that back significantly, and we brought in some AI and automation experts because the platform was essentially pretty much there. We rationalised the sales team, and with the approach that we have with targeting those media companies and publishers, it doesn't require as many salespeople as if you're going after those resellers, so you can get a lot more bang for your buck with less people there. And yeah, operationally, that's been probably the area where we've had the biggest impact by automating a great deal of the way that we deploy products. That's enabled us to really rationalise that. So that should give some idea in terms of the staffing side of things. On the technology side, we remove some third-party technologies that we now do in-house. And also with the upgrade of the platform, there was a significant saving on the hosting. We brought that down by, I think by the time we're done, it'll be about a $20,000 a month saving. So yeah, there's been some very sizable cost reductions. And so now we believe we've got the business to a point where the cost base is it's in a pretty good shape. Let's put it that way, Brian. And I'm just conscious of not putting a number out there because we haven't published the September numbers yet.
Okay, well that's helpful. So thank you for that. So on to, I guess, the revenue side, and really tied into that. So I think earlier you had indicated that you were expecting profitability by the end of your fiscal year, which was June 30th, and you were profitable in that quarter, but as I mentioned, there was some reversals, some research tax credits, some other things. As you look at the landscape now, kind of what are you looking at for the September 30th quarter? What are you looking at for the December 31st quarter? And do you still feel you're able to hold on to that forecasted profitability?
That's a good question, and again, I've got to be mindful of how I answer that, given that we have not released our September numbers as yet. So you saw in the F20 that we provided some billing relief as we transitioned from one platform to another. We continue to provide some of that during the September quarter. So our focus was really on that consolidation and retaining as much of that client base as possible and keeping them as happy as possible. We believe we've done that, and now the contracts that we've won, that we've now proven ourselves in the market with those customers, should start to bear fruit. Getting started with them took a little longer than we would have liked. There's some amendments that they were required to make on their end, which they've successfully done. But we're pretty confident the rewards are going to be there, and we should start to see that in that December quarter, Brian. and with the cost reductions that we've made with a small amount of revenue growth, then that would enable us to hit that profitability target.
Thank you. You had referred to, I think it was in the press release where you announced the media company. You referred to them as the perfect partner for you. Could you expand a bit more on that? And now that you've been working with them for a while, is it in fact all you had thought it would be, and more? Tell me, I guess, what the experience has been to this point, and where you see it going.
Yeah, look, they've been great. They're very very positive about what they've seen with what we've delivered throughout the trials. You know, they were quite amazed at the results that we delivered for them. The way that these groups tend to operate is they like to test it, really kick the tires very hard, make sure that when they do go out to their customers, that they can be confident that they're not going to have egg on their face. That's really important. And also the other thing to think about with these companies is that they don't tend to engage with parties on revenue projects that are small. They need to move the needle. If you're a media company that's doing billions of dollars of revenue, then you look to add products to your suite that can move the needle a little bit, right? So it's actually better, and the opportunity is greater than what we had thought when we first started, to be honest. And we're doing everything we can to make sure that we deliver well, that we provide the reporting that demonstrates how well it's going. And if we do all of that, then the market, this is an untouched market opportunity. I don't know how much more I can say than that. There's literally millions and millions of articles published every year through publishers, not just this particular one. And we hadn't considered it as a product until they pointed it out to us. And so clearly no one's doing it, and we can.
So Gavin, this is Florian speaking. You have mentioned on one of your slides, in terms of the pricing model for your national product range, it starts at around $500 a month. So
Correct.
Would that be per article, for example?
Without giving away pricing specifically with any client, yes, the principle is that the monthly price is per article or per month, yes.
Okay, so that looks like a lot of money to me. We have a question from the audience. Would this be a solution to integrate into all the e-commerce platforms, i.e. Shopify, Big E-commerce, BTEX, etc., that can be part of their partner marketplace and merchants can sign up via self-service? Gavin, please.
Yeah, that's possibly more of a brand boost type solution. Brand boost is designed to help lift the product prominence inside whatever marketplaces they're being sold, whether it's Shopify or Amazon or Walmart. So you could promote, and if you had an article on a product, you could certainly promote that, and I'd be very confident we could get that to rank very well very quickly, if that's what you're asking.
Thank you. So in general, for the audience, if there's a question, you can put it in the chat or you can raise your hand and we will let you ask yourself.
Well, I have a question. It's Brian again. So continuing on with the pricing discussion, you mentioned that this was the wholesale price. And, from other conversations we've had, I know this is kind of the just, get the product out there and make sure people see the value that's coming from it. But at some point in time, I think you've mentioned that it's your intent to do what I would refer to as value-based pricing of some type. Can you speak to that possibility, and if that possibility exists, the timing of it? Because it seems like for some of these people, they would be getting an incredible price, given the revenue potential that could come back to them. So.
Oh yeah, absolutely. That's a great question. It's a bit remiss of me not to have mentioned that. So one of the great benefits of this Keystone solution for using articles as an example is that you can measure the success of the campaign through the number of clicks that are coming through that article, or the increase in clicks. All of those clicks have a corresponding what's called cost per click value, and that's how much customers would otherwise have to pay to get a click from an ad. Now, something like online loans might be $20 per click. So if we can demonstrate to the publisher that we have delivered X amount of clicks at X and Y amount of value, it actually really makes the case easy to demonstrate value to the customer. So you're quite right, Brian. We don't intend to stick with a straight baseline fee for the service. We'll move to value-based pricing, which is aligned to the advertising market. So it's a price that customers are used to paying. They're familiar with paying a certain amount of dollars per click, or for the audience that we're delivering. I don't want to switch screens because I'm sure I'll stuff it up, but we took a client from page 2 and 3 for online loans and installment loans up to positions 1, 2, and 3 nationally in the United States. Now, I wish we had value-based pricing on that, because that's a pretty phenomenal achievement to do that. But we're also doing the same thing with our other national clients or media clients in competitive spaces like entertainment, gaming, things like that are very, very difficult to rank for and very valuable. So now that's a tremendous question, Brian. We won't be able to get into that until next year. We need a bit more evidence and that around it, but we've got the reporting to showcase.
Thanks. I'm just thinking, so how would you work that with resellers? Are they somehow, is their price somehow to adjust if it's a value based to the ultimate customer?
Yeah, typically what we do there, Brian, is we give a discount to retail. And so depending on the spend that a partner has with us, the discount is greater. So I'll just use an arbitrary number. So let's just say we increase the click value by $5,000, say for 1 month. Then we'd either give a 30, 40, 50, 60% rebate to the reseller to encourage them to bring more clients on. So we don't have a finalized model on that, but that's how we've operated to this point, Brian, to give you an indication.
You had, Gavin, a lot of trials going. You still have a lot of trials ongoing. Has there ever been a case where you simply didn't deliver, where a partner or a client wasn't happy with the results, or where it just didn't work at all for whatever reason?
Oh, yeah, you do get those. It's not very common. If we're talking about the trials in recent times with the new platform or the Keystone, what we found, actually, that's a really good question to lead into how we also solve that. What we found with Keystone is that we were historically applying the Keystone to a customer's existing website. Now, if the customer's website is not structured properly, applying Keystone is just going to make it degrade faster, because we're applying more power to it in some way. But if that power is misdirected, it's actually going to have the reverse effect. So in some cases where the customer's own individual website is really poorly structured, then it's not going to work at all. And we have found that with a few. Equally, we've had situations where it's worked really well. We had one reseller in the US, quite a big one, turn it off because, and I'm not exaggerating, he said, well, we've got too much business and we don't need it anymore. So that was disappointing. That's not a typical use case, by the way. So Florian, back to the point about Keystone. So we've made the decision that in very few exceptional circumstances, we won't touch the client's website because it's not worth it. It's too time consuming. We need all sorts of access to the customer's internal IT. And they're usually not grateful at the end of it. After we've done the work, after 3 or 4 months, they seem to think that somehow magically they've done it themselves. So what we are doing in that regard is we're building our own pages out, and we're applying Keystone to them. So what we'll be able to do is go to the agency or go to a client in a particular industry. Let's just say agribusiness, for example. So we'll create an agribusiness website, optimize it for agribusiness and the terms associated with that, and then go to customers that are in that industry and say, would you like this website? Because we can then take out the content that we put on that site, which is nonsense content, and replace it with their brand, their logos, their content, without losing any of the ranking power. So think of that as like a digital real estate play. So that's been through the testing that we've done, Florian, and working with clients. We believe that's the best way to go, because if that customer then ever leaves, then we'll go to the next agribusiness company and say, would you like this website? We just take the furniture out of the property and put new furniture back in and repaint it with that. So hopefully that's an analogy that makes sense for the strategy on that side of things. Did that answer your question sufficiently, Florian?
Awesome, yeah, that's great. You mentioned something, you very rarely touch the homepage of a client. So I think it's fair to say also from reading in the filings and so on that you're more and more focusing the business on sort of the high throughput and highly scalable opportunities where you really don't need a bunch of people in your own company selling it or implementing it, where a lot of these things are automated and resellers do a lot of the work for you, partners do a lot of the work for you. Is that sort of a fair description of sort of the strategy going forward?
Yeah, that's a very fair description. That's exactly what we've aimed to do. And so with the publishers, I mean, it's in their interest to have their sales reps go out and sell an add-on product to something that they're already selling. And we've got the implementation automated. So I'm telling you honestly, it's like literally a 2-minute exercise to implement it. So very, very little work. And at our end, we really only need the one account manager in that instance who can talk to lots of publishers. So they could do, I'm not saying this is how many they're going to do, but they could be thousands to tens of thousands of articles that get published. The implementation's automated, the reporting's automated, and we don't need a whole bunch of salespeople talking to that customer. So yeah, you're dead right. That's what I was trying to get across in terms of our strategy. Our go-to-market is being quite laser focused on how we're going about doing that, getting resellers with product that they don't need to know how it works, that they can just put their content into. On the local side and on the national side, either we build the pages ourselves, rank them, let them sit there, and then go to our agencies. And then on the national side, which I guess I've explained at length. So it's very good insight there, Florian. Thank you. Awesome,
yeah. And I think that is one of the key aspects of what is really, really great at the business model. Because if you think about it, if there are thousands of articles potentially being published, right? And every one of them gets you $500 without a lot of incremental cost. That's a really nice amount of money that falls straight to the bottom line. So we have some more questions from the audience. In the future, how will you manage several potential customers who compete for the same keywords?
Well, that's a curly one. I'm sure it's going to come up. I don't know how we'd handle that we don't tend to reveal who the clients are. So you've gathered that, right? Because we do like to maintain their confidence. Hopefully we can get them both up into page one. One thing we don't determine is where the position ultimately sits, right? So if I can answer that in a way which is with diplomacy, it would likely come down to how good that individual publisher's site is. So if one is better than the other and we apply the same technology, then in Google's eyes, they're more likely to favour one than the other. Because as you quite rightly pointed out, we don't touch the website. So then I think it would come down to who's basically got the best existing website would win out on that contest.
Okay, looks like a good problem to have. Another question from the audience.
We have actually ranked 2 competing clients on page 1 before for the same term.
Oh, awesome. Very, very good.
Yeah.
Okay, in the past, you mentioned trimming down on the number of resellers. How concentrated are sales across the 100 resellers or partners?
Sorry, when you say how concentrated, how do you mean there?
I think what he means is that like roughly evenly distributed what the 100 resellers bring in terms of revenue, or is there like one who does everything and the other 99 do nothing, to give you an extreme example?
No, there's a lot of them that would spend around about $1,000 to $2,000 a month mark, and there are a couple of much larger ones. The ones that we talk about that are enterprise, they're spending $100,000 a year or more. So typically, it's like, let's say, for example, if someone's spending $1,000 a month, they've probably got 4 or 5 clients in their book if they're spending that sort of money. But no, we're not reliant on any one particular reseller for that line of business, if that answers the question.
Okay, I think that is pretty much it, what we have in terms of questions. Last chance for anybody to ask, write, raise your hand. If not, Gavin, is there anything we should have asked that we didn't ask? Anything you want to share with us before we finish?
There's probably a lot of things I'd like to share, but I'm not allowed to. Look, what I would say is that we are very optimistic about where we're at this point in time with what we've done, and we're hoping to see the fruits of those labours and the efforts that we've put in coming through very shortly. That's what I would say, Flo.
Well, with that, Gavin, thank you once again for all your time.
Sorry, and I think very shortly could potentially mean even the next quarter, considering that a lot of the contracts you have been announcing and partnerships should probably come to fruition right around these days and weeks. So my words. Yeah, I certainly think so. And yeah, I'm very excited about Locafy going forward, and I'm happy to be participating in this as a shareholder.
Thanks, Juan, and really appreciate you guys' support.
All right, so with that, Gavin, once again, thank you very much for your time. I remind everybody, unlike a lot of the companies we follow, Locafy does a great job of having a lot of press releases informing us of what's happening. And I think you'll get excited when you see how many new partnerships, how many recent announcements they've had. And I think they're really on the cusp and getting close to that inflection point as to when their results will be dramatically improving. So thank you, everybody, for joining us. Gavin, thank you for your time. And with that, we'll say so long.
Thanks so much. Thanks a lot. And to all of you who are attending, thank you.
Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as the accuracy or completeness of the statements or any information presented by this podcast, and any liability, including in respect to direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. The views on this podcast expressed are those of the speaker and not Breakout Investors. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company stock, you must do your own research. Thank you for listening.